Hello and welcome everyone to Oil Asset of the Day, presented by myself, Phil Carr, at the Gold and Silver Club. So first of all, we're just going to recap on what actually happened last week with crude oil, where of course we had that very significant breakout off the open from the Sunday through to the Monday, the biggest move that we had seen since 1991, since the start of the Gulf War. So oil prices, they broke out 19% on the open. However, we did see Saudi Arabia manage to get production back online quicker than expected, and quite fast last week we started to see oil roll over. In fact, we were selling short oil last week, banking partial profits as the price continued to break down, banking over 350 points on our sell short position with Brent crude oil. In fact, we've established a new sell short position just this week for WTI crude oil. Now, in the latest week, it's been interesting from a hedge fund manager point of view. So hedge funds and money managers, they have reduced their overall net long positions on Brent crude oil, and they've increased ever so slightly on WTI crude oil. Now, in the previous week, we did see a bit of an increase in those positions, with the rhetoric starting to turn a bit more optimistic with respect to US and China trade negotiations. And that, in fact, started to get evidence within the charts on the Friday close before we saw that big breakout from geopolitical risk the previous weekend. Subsequently, what we've actually seen here is a lot of sell shorts in the market have been squeezed automatically with such a large push higher on oil last week. However, there weren't really any additional buyers at the upper end of the ranges. So what we started to see last week, after that big breakout and gap on the open, the price action came back and tested the weekly highs, but then was unable to get much further. And very quickly, we started to see the price action roll over as we saw essentially a lot of fake news with respect to the production not going to come back online for several weeks or several months. That wasn't the case. There's been a new report on Monday which suggests that 75% of oil production from Saudi Arabia is going to be back online within the next week here. And with that, we're seeing some pressure to the downside with oil right now. Now, we do have the API data which is due out on Tuesday, Wednesday's oil inventories as well. You want to keep a very close eye on that. But at the moment, we still haven't filled that gap from last week. I'm looking for WTI crude oil this week for resistance to be around that $60 per barrel handle, and I'm looking for a rotation back towards approximately $56 per barrel. So within that range at the moment. So we of course could get some choppy price action, as we often do on oil with respect to geopolitical news. We're keeping a very close eye on any breaking news items and also the oil inventories data this week as well. But overall, we are expecting rotation back towards the lower end of the channels. We're looking to capitalize on a sell short position and looking to see whether we can in fact start to close that gap that was created the previous week from the very significant open that we had from the Sunday through to the Monday, which was of course over a 19% move to the upside. So with that, we do maintain a bearish bias over the course of this week. That said, if we do get a rotation back towards the levels that I've just mentioned there, so back towards the $56 to $55 per barrel handle, I would then look at those levels for potential evidence of buying back in, again at a key magnetic level for oil. Oil does tend to move very well between those key round numbers, $60 per barrel, $50 per barrel, and so forth. So in the beginning of the week, we're looking to capitalize on that move lower. If we do roll over with oil this week and hit those key levels I've mentioned, I would then look out for buying evidence at the lower end of that range again. Normally the end of September is a little bit bearish for oil prices, and then we start to springboard higher again going into October. So we also want to capitalize on that seasonal play as well. So with that, that's been Oil Asset of the Day, and of course I wish you good trading.